The ETHTOL market is projected to grow at 35% every year till the end of the decade. There are two stocks here. Joby is flying high with direct contracts with the US military and great progress on its civilian ETHTOL program. And we've honestly had ETHTOL on our buy list since 19th of May. I share a watch list every week with my mentees. And how did we know that this stock was going to moon? Well, I want to explain that to you. I also want to answer two questions. Is it too late to buy Joby now? And is Archer possibly the better buy here? But how did we really get into Joby on 19th of May? Well, we followed the very, very simple rules that Wall Street has to identify potential winners, potential breakouts. It's a simple system. It's 3 rules. I will teach those to you, not in this video, because it would make this video like an hour long, but I will teach it to you in a live training on Saturday morning at 10 a.m. New York time, where you can actually ask me questions about the rules, where we can run through stocks like Joby and a ton of others that are about to break out, not like Joby that is already obviously broken out. If you want to join me for that, go to felixfriends.org/training. It's the first link down below in the description, and join me for about an hour and a half live training where I spill the beans on what I learned from my Wall Street mentors. But let's go back to those two questions. Is it too late to buy Joby here? And is Archer the better buy right now? So Joby has clearly broken out. We wanted to buy it closing above 760, which was, if I am allowed to draw a line here at 760, that was our entry line, right? Closing above that. And we pulled back a little bit. And we then went up, we pulled back a little bit, went back up, pulled back a little bit, went up, pulled back a little bit, and it's given you a little bit of an idea already, isn't it? Is it too late to buy it? To me, this is an extended rally. It's a great stock. They're doing amazing stuff. They've got direct contracts with the Department of Defense, and they're making very good progress on their commercial ETHTOLs as well. Gapping up again as I'm recording this here, and by the time you watch it, it might be a day or two later, but that's completely fine. Doesn't actually change any of the story. So I would always wait for the pullback on rallies like this extended. And you're very likely to get one. And if you don't, it's also okay, because there are plenty of other stocks we can make money with. So say we go a little higher, we come back a little bit here. That's kind of where we want to get into this. Ideally, maybe even pull back all the way to one of the recent gaps. So that would be at about 1420 or thereabouts. Anywhere below that, to me, would be an additional bonus. Archer, on the other hand, has not had the breakout that we want to see. Instead, Archer has done a rather sad yet predictable sort of mini breakouts which have just failed again and again and again. And if you look at the red box that I put in here, that was sort of the resistance zone. Now, I think we need to shift that up a little bit, because the zone has actually shifted up. What am I connecting it with? Just the highs, approximately. Okay, that's a little bit of an outlier there. But that one here. So we got 1, 2, right now 3 that are in that zone. So we look for, yes, catalysts. And you can see that here in the news. Inside Trade Vision, we have our Trade Vision analysis in here, and it's a platform that we built. So I never will recommend or promote anything that we don't actually own and build, because I believe in giving you guys tremendous value, and this gives tremendous value. So there's a capital raise, which the market didn't love. Their CFO resigned. The market didn't love that, but we seem to have gotten over that, and we're getting excited again. Now, one thing I love about Archer is their partnership with Anduril, which I wish was listed, because I think it'll be a great thing to invest in. Anduril basically makes drones for the US military, so autonomous stuff flying around, blowing things up. They have a partnership with Archer to basically use the Archer's engines to not have to develop the whole thing again. So Archer is going through for the US defense contracts in an indirect way through this partnership with Anduril, which I think is a smart move. I think Joby's gone direct. That's also a smart move. There isn't really a right or a wrong here. I think both strategies can work. But if you compared simply the charts, well, Joby's gone to the moon, Archer's not. So what we're looking for is a breakout out of that zone, which would essentially be at about 1250 for the brave. For the really, really cautious, you'd wait till you take out the top here, which would be at about $14, so $12.50 or for $14. Maybe write that down. And of course, I'm not telling you what to buy or where to buy it, but what you could also do is you could just set alerts here in Trade Vision, and then they would ping up on your phone, and that way you would remember, which is something that we're usually not very good at, right? So I've just done that. I've got my alerts set up in here now. You can see them there at the top. Another thing I look at is what's Wall Street doing about it? And yesterday, as I'm recording this, and again, you can look this up for whatever day you're watching on it, in Trade Vision, you can see the dark pool trades. You can filter for the stock here, Archer. And then we saw $1.9 million of core buying. Billion would be nice. So we are bullish overall, not monstrously bullish. The trades are not huge. They're relatively modest in size. So we'd like to see these get a little bit bigger, but it's still a bit of an outlier, new kind of a stock. So the whole ETHTOL thing, I think, is coming back. We're basically going to go back to the glory days of after COVID. Why? Because we've got all this money coming in from governments. We've got money printing happening. We've got interest rates coming down, whether it's the second half of this year or 2026, it doesn't really matter. And the tariff problems will somehow get less. And we're already seeing that, right? The market's getting more resilient to it. So Archer is a lag compared to Joby. I prefer being in the one that isn't lagging, to be honest with you. But I do think that Archer, just because it's a bit more of a complicated business to understand, has the potential to follow suit and do something similar. So I like the sector still. I think autonomous everything is coming. The military will be first because they don't need to deal with as much regulation as everybody else. But transport planes initially will be completely autonomous. There'll be no pilots in them eventually. And it'll be the same for all planes and all helicopters and everything, because it'll be safer and it'll be faster. And I know some people are not going to like the sound of it, but this is the future. So I like these stocks. I also looked for, are there any shovels in this sector? There isn't really that much direct kind of key supply chain here that is 100% exposed to these guys because they're not big enough yet. You know, Joby is hoping to build 24 planes in a year. So we're still very, very early. What does very, very early also mean? It means it comes with lots of risk. So you need to learn how to manage that risk smartly in an automated way. That's another thing I'm going to teach you and give to you completely for free if you join me on Saturday at felixprehn.org/training. If you got some value out of this, check out the bigger drone review video I've done, and I'll link to it right here. President Trump's U.S. defense budget is shifting $900 billion in spending towards cost-efficient, more nimble defense contractors that focus on drones, autonomous munitions, and other cyber capabilities, and will make related stocks go absolutely bananas.